There we are. Now, so
You were saying make sure we keep what now? Make sure we keep.
we're going to just when we start, let's I'll interject for some questions and I'll let you guys kind of interact a little bit with this. But this is going to be a video that we're going to probably use as our first intro and recap of um, the DTFX videos 1 to 4. And I agree. So I'll handle all the speaking from this point. This video is designed to catch everybody up on a synopsis of videos 1 to 4 in the playlist. And then essentially after this, we're going to be referring you guys to this video, right? We're not going to be answering questions on swings or what a validated low is or any of that sort of basic stuff. This video is to function to give you guys that catch up that you need, and then we're going to start working on narrative, order flow, and whatnot. Okay, so there's not going to be any premium concepts that are going on here. There's not going to be anything sort of advanced that you might find, right? You know, Dave's content really revolutionized, in my opinion, the future space, and it certainly revolutionized my trading. It certainly, you know, uh, revolutionized Chuck's trading. Um, you know, we're gonna go from there. Okay, so let's be cognizant of that, and give thanks to the man, and not not try and take away from stuff that people are paying for right now, right? So, really quick, little introduction for people that have joined in the last 12 to 24 hours. This group is to function as the resource hub and education hub for uh, the futures community and certainly the DTFX community as well. We're looking to really ramp up everything that we're providing. We're going to over deliver value for what we're looking to charge come June when this switches to a different structure. And I think that in your 48 hours that you're here for, you'll recognize just looking at the education tabs alone and this video and everything, um, just how much value there is here for yourself and yourself going forward. So with all that out of the way, let's we're going to use Friday's chart, and we're going to go through the DTFX concepts videos 1 to 4 and kind of apply them to as the price action was on Friday. Okay. So let's begin with the basics. It'll be a nice little refresher for everybody. The market does one of two things. The market is either trending or it's ranging. And if it's trending in a bullish trend, we want to see higher lows and higher highs being formed. And then eventually, what you see is these higher highs and higher lows tightening up. And you see some sort of a range being formed typically. And then we start a bearish trend where we're seeing lower lows and lower highs until we potentially reverse and start moving back up again. Okay. So what we're doing is we're counting our lows. These become validated when there's a pullback, and we tell a pullback by a body closure above that low point. And this becomes a protected low when we have a body closure above the previous high, right? So if you're seeing a candle that you have a low here and a high here, and this one closes here at the same level, and then the next candle opens above it and trades down, this is not a valid high, right? No, that doesn't work. It's got to be a bullish close above the prior high. Okay. And what you're looking for within these swings are the previous range. So this, and we'll use the 50% level for this. So this is our swing here, the previous range that put in the low that made the high. We're looking for it to trade back into it, and then ideally we're looking for it to trade out of it. Okay. Different other methodologies will use this as a swing. That's not DTFX. DTFX is the prior range that put in the low that made the high. Or conversely, in a downtrend, we're looking for the up move that put in the high that made the low. Okay. Now, if we're looking at this and say this is the hourly chart that we're looking at, we understand that the lower time frames facilitate the higher time frame order flow. So in this hourly push, you're seeing on, say, a 5-minute or 15-minute chart. I'll make this a little bit different color, perhaps. We're seeing something like this moving up until we see something like this to put in this low here, right? And then even further down on different time frames, the 1 minute, the 5-second, etc., you're seeing something like that as well within this. That's what we mean by price is fractal. What happens on one time frame happens on every time frame. Okay. So we're building narrative using what structure is doing and looking for reversal points within higher time frame areas. Okay. Now, when we're anticipating movement into here, we're looking for areas that are responsible to give these points. So, for example, there might be an area here that was responsible for putting in this high. We draw that over, and this is a zone we're looking at, right? With the understanding that if we're taking a long out of here, that we're just taking it potentially to the prior zone, right? In a downtrend, if we're taking longs, these are scalps until we get some sort of bullish momentum that allows us to anticipate potentially a change in trend. And likewise with shorts in here, right? If we're taking a short, it might be a little scalp here, something there, whatever. If we're not profitable yet, you're looking to trade with the trend on the early swings, not when it's starting to tighten up, trying to catch the last 5 points of a move before it dumps for 100 points, right? We're looking to trade with the trend. We're looking to get into zones that were responsible for something over here. Okay. I see a lot of people that are, seeing a trend like this, for example. Get rid of this right now. That have a trend similar to this, and they're seeing this range in here, and they're shorting here, trying to move it back down. They're shorting here, trying to catch this move back into this range. They're shorting at the tops here, trying to catch the top of the move. We're not looking to do that, right? We're looking for our structure and our narrative to allow us to dictate what price is telling us. Okay, so backing up slightly, if we look at this chart, and we'll make this a little bit simple, a little 50% there, and we do see something like this. There's two sides of the chart here, and they both function differently. The left side of the chart is what we draw over for potential reversals when the trend has shifted, right? So we might sweep this low here, and that's our trade back up into here. We might have a look at the area responsible. Let's say it's up here, and we're looking for the left side of the chart to indicate potential reversals in here. Okay, the right side of the chart focuses more on continuations. right? And it's much easier to start with, right? Where we're looking at this swing, looking for a continuation of the bearish trend. So you're looking for a short in here that's giving you quite a bit more than trying to catch the bottom and taking, say, 10 points or something in there, at least when you're starting out. Okay. So if you're finding that your win rate is actually quite low, that's likely that result of that, where we're trying to catch the big move to take the high of the hourly chart going, and you're taking a long in here, and you're getting stopped out when it comes back down. You're taking a long back up here, thinking that we saw something, and then you get stopped out here. And then you're trying to take a long potentially down in here that's going to make up for all of that, right? All the while, we've got a short zone here that delivers nice points there. We've got short zone here that delivers us nice points there. And we're expecting a potential short zone in here that delivers us down again. Okay. So when we're talking about areas responsible, and we'll get into video 2 a little bit here because it's actually my favorite video. We're talking about SNDR, and SNDR is essentially is supply and demand zones that are responsible for something. And there's different types of those. There's a zone here that was responsible for breaking this high, and you'll see accumulation going on in here that then breaks up and runs this high. This is SNDR. There's also an SNDR zone here. I'll get rid of this. That's responsible for breaking this bullish trend. And this is a stronger zone as a result. Okay. So when we tap back into that SNDR here, we're monitoring, we're expecting the bearish trend to continue because it just broke trend here, taps back into it, and then continues. But we're also monitoring it because if we get a closure above it here, then we're expecting these highs to get run and this first flip to be fake. Okay. But the SNDR zones are very, very powerful. And what you're essentially looking for with those is you're looking for unmitigated levels, either near the origin of the move that taps back in, break structure. We get a double tap into here, potentially a double bottom, which would be fantastic because we know that double bottoms actually run both lows. And that will be our larger move out of there. It's called the Dave the Rave pattern, and it's very, very powerful, very, very prevalent. And we'll see some examples of that in the chart that I'm going to show you guys here. Okay, so let's take these two concepts and we'll use Friday's chart for a second and we'll kind of extrapolate those to the live market and kind of see where we're at. Okay, so if we're looking at Friday, and I reviewed this with the group already, we know on the hourly chart that we have a bullish trend, right? We have a low here, a high that was put in, a low that got put in, body closure underneath here, which failed to put in a new high here, but also failed to put in a new low. So it tried coming down, and then we see a flip that came in. It tapped back in here, right? So we see this, which is a shift in order flow, and we ran and closed above the prior high. This is called our bullish flip. And you see what happened was as soon as this put in a high here, traded back in whereabouts to our prior swing, right? We have this low, this high, back down to here, right? We took this level here that got broken, and we noticed that it tapped into the 50% level of this prior swing. So we saw a shift in order flow at the 50% level, understanding that our higher time frame went like this, tap back in, and now we're expecting bullish price action, right? Now, if we look at this on a lower time frame, what you'd see would be the same sort of practicality, right? If we look at the candlesticks, and we'll go over candlesticks a little bit more in the future here, but consider what you see in here on a smaller time frame than the hourly that we're on, right? We get a high here, put in a low, put in a high, put in a low here, a high here, came down, came up, came back into the range, and then left. What does this look like? Right? Is that not the exact same thing that we saw here on the hourly time frame? Now on a smaller time frame at the 50% level, right? Likewise with something in here. You'll see that pattern. This is what's called a confirmation, and we'll go over that a little bit more later on. Okay. So now we're fast forwarding into Friday's action, and we see overnight put in a confirmed high here over this high here. And now we're expecting a higher time frame pullback, and we're monitoring the higher time frame pullback for a potential delivery above this high, right? That doesn't necessarily mean that this is going to go down to the 50%, right? If we see a lower time frame flip in here to deliver us up, then we look for something like that. But this is left somewhat unmitigated, which price also tends to do. Okay. But it's important to use our narrative and our structure to understand what the possibilities are going on here, and then allow price to tell us what we're going to do. So that doesn't mean shorting in here expecting the 50% to get touched. Okay. So if we drop down even further and we have a look, we're looking for areas responsible in here for lower time frame order flow shifts to take us up. And what we see, and we went over this with the group, is we see a high put in here with news, right? A low that got put in actually here. You see lower time frame sort of shifts. It came up, right? We broke this low here. So we're expecting what? We're expecting bearish price action. So we're not looking in here for a long to take us up because the price is telling us to go down, right? We're seeing this. And then using structure, we're looking for potential flips in order flow at some point leading into this retracement, with the understanding that the higher time frame's in control and the lower time frame is going to facilitate that. Okay. So what do we see? This high puts in this low here, and then we actually trade and close above it here. So say on a 15-minute chart, you're expecting what? Tap back into this prior range for structure and deliver out of it on the bullish side. So if we're looking here, weird, very random, right? Almost exactly the 50% zone. In fact, did it 950? One tick. You would have had one ticket drawdown if you would have bought there at the 50% level. Okay. So when we're looking at areas responsible, this was the zone here that pushed up and then broke this trend. And you'll notice as well that when we left it, it was actually unmitigated currently, right? So we see, say, if we draw it from here to here and bring that over, it left the zone here, came back into it here, and then left again. Okay. This is what you would consider an SNDR that broke this bearish trend in a sense. And now what you're doing is you're saying this is a lower time frame SNDR that's breaking lower time frame structure, and we're looking for a zone that's going to break this higher time frame high over here. Okay. Which it ended up doing, obviously. All right. Let's pause it for a second and kind of go. Anybody have questions so far what we're talking about? Is this all clear? current zone you have, what makes that a zone. Okay. So this zone was responsible for breaking this high here, right? Which was a confirmed high in our trend, right? So we're looking for, we have a high here. This low that got put in broke this low, closed down here. This low was validated when we had a body closure above this lowest bearish candle. This is the valid low, which then put in this valid high, which was confirmed when we closed above or below this bullish candle here, traded down, put in this low here, which was then confirmed when we closed above this bearish candle here. And now we're looking for this protected high, which was protected because we closed down here, right? So there's a difference between protected and validated. We closed above it here, and this was the zone responsible for us breaking and closing up here. Okay. That's video 2. Okay. Now, what was the higher time frame zone that we're looking to push up from if we're going to break these highs here, right? It's the last validated high, which was then protected and broken here. Okay. This is not a protected low or validated low, sorry, because we didn't get a body closure above this. So that makes this high not part of structure. What we consider with this is a change in order flow, and this is called a candlestick shift. Okay, where it trades up, down, up, down, and then back up. Okay, so that's what's called the way to look at it, I suppose, would be that on the seconds time frame, if you zoom in even further with the understanding of what we just talked about, the price is fractal, we've got this trend here, which is essentially doing this, facilitating a lower time frame pullback to deliver higher time frame order flow. In this case, the order flow will be about the 1 minute chart, right? You had a range here, broke below it, traded back in. This seconds move facilitated this low being put in, and then we traded above it. Okay. So price is fractal in that sense. There is a difference between protected and validated, yes. Protected lows, protected highs, actually, let's go with that right now. This high becomes protected when we close below the prior low, right? So this low was put in from this high. It closed below here, so this became a market structure change. Put in this high, and then we closed below it. So this high became protected when we closed down here. It became validated when the last bullish candle had a closure below it here. That became a valid high, right? And that's important because this low here, even though it closed below here, was never validated. You understand that? Because we didn't have a closure above it on this pullback, which leads to lower prices. Right? When you're talking about prior ranges, essentially we have a low here. Somebody asked why this isn't a valid low. This low is responsible currently for nothing, right? You've got a protected, or not protected, you've got a valid low here. Its job is to put in a new high. Failed to do that, as it should when we're in a bearish trend. We've got a valid high here, and its job is to put in a new low, right? So anything in between these 2 points is a range, right? We're not engaging long with our stops below a weak low. We're expecting lower prices. So anything that you would consider as a valid low in here would be on seconds time frame, right? And if you're trading off of the seconds time frame, you really got to be on the ball with your structure, because as you see in here, this is structure on a seconds time frame here, leading up to a pullback that then puts in this low here, as we just talked about here. Okay. All right. So let's pause with this, and we'll go a little bit more into following our protected highs and lows here. And again, this is something we share with the group, right? So when we're monitoring this uptrend, what you're doing is you're following your protected lows on the way up, because now we're anticipating that our higher time frame pullback should be over, and we're looking to create what? We're looking to create structure like this on our way up, at least on a higher time frame. And then our lower time frame is facilitating pullbacks that then lead to higher prices until we get a structure shift, right? And in order to determine what a structure shift is, we need to understand what our protected lows are. So you guys will recall from the group, we're looking in here for where the valid high is. It wasn't in here. It became here when we closed below this candle, which put in this low here, which was then validated. This candle was validated here. So now this low's job is to put in a new high, which it does here. So as soon as this candle closes above this high, this low becomes what? Valid and protected, right? We continue up. We've got our swings that are going on here, right? This high becomes valid here. This candle closes above here. This candle closes below this one, putting in this low. You could argue it's this one, which then becomes valid when we put a new high in, and we actually break structure here as well. So this becomes our next protected low, because we just broke structure to the upside. And you'll notice that this candle here closed above this one. So this is our bullish candle that we're looking for anything to trade and close below it to make this a valid high. And you'll notice that nothing closed below it here. We get some sweeps, but we need a body closure, which tells us what? That we're expecting higher prices. We get higher prices here, right? So we're still continuing our bullish trend. We trade below it here, close below this candle, making this a valid high. And now this low, we're looking for a low to be formed that's going to take us up. If we close below here, then what happens? This is a structure shift, right? We have a valid high that put in a new low that broke structure. But you'll notice obviously that it does not. So as soon as this low puts in a high, that would have been here actually, that closes above this here, this low now becomes our next protected low. And you'll follow the trend up. So we continue up. We've got a closure here. This bar didn't close above this one. Trade up. This bar closed above this one, and we get our valid valid high in here as a result. But our protected low is where? All the way down here. So recall from videos 1 and 2 that this range here, or sorry, this was our prior range. This is our new zone with our protected low. This high's job is to put in a new protected low. And you'll notice that it can't break and close below here. So we get a lower time frame shift in candlesticks that's facilitating a pullback to this level, but we're still bullish structure. Does everybody understand that? Right? So if you're following your highs and your lows and your protected highs and lows as a result, you're expecting a short in here, even with confirmation, to be a scalp back down into the prior range, which is the down move that brought that valid high in. And what do we see here? We're going to go over candlesticks right now, right? So what do we see in this pullback, right? We see a low, a high, a low, a high, a low, a high, trades back in and leaves, right? So this is what you would use for a confirmation that price is ready or finished its pullback into here. And your stop, we're not trying to take a long necessarily in here and here and here, trying to anticipate the way up. We're waiting for that candlestick shift to tell us that the lower time frame order flow has shifted in a key area to take us higher. Okay. Now, with the understanding that price is fractal, we see something like this. We see it on a higher time frame. We're now looking for a lower time frame to facilitate our movement in the direction of the trend, right? Candlestick flips do not necessarily mean reversals, right? So if you see candlestick flips, like for example, actually, if we look at a candlestick flip here, up, down, up, we broke, we traded back in and left. That does not mean a higher time frame reversal is coming in and we're shorting and holding for the low to be taken for the day, right? These happen from higher time frame zones because the higher time frame is the big daddy time frame. It's the one that that dictates everything, and the lower time frame order flow follows suit. Okay. If we're looking at this being a 1 minute pullback into this zone, then we also have to be cognizant of how much time it took to deliver back down into here, because that's going to be equivalent to the amount of time it takes to leave. It usually takes about 3, maybe 4 bars to leave a zone, depending on the time frame of the zone to put it in, right? So for example, this zone here is a 1 minute zone here, right? See a high that got put in. The pullback lasted 3 candles, and then we started to leave it here, right? So if we're anticipating 3 bars to leave the zone, 3 to 4 bars, as soon as we trade into it here, you go 1, 2, 3, and then 4, and we've left the zone. And there's your 1-to-1, right? So that 1-to-1 is simply taking the high and the low. The 50% level here, your stop's below the bottom of the zone, and you're anticipating within 3 to 4 candles or so that we're going to deliver a 1-to-1. Okay. Does this make sense? Is everybody with me? Good. Okay. So let's continue following our protected lows, and then we'll use our candlesticks as well, and we'll try and determine whereabouts we might be looking for potential reversal and what that looks like, right? Because we have our high here, we need this one here to be closed above, right? We didn't get a body closure in here. We actually got it in here, which makes this low now protected. Became valid when this bar closed above it. It becomes protected when we close above it here, right? Which then makes what? This our new high. Sorry, this one here makes this our new high. We trade up, we sweep, we actually close below here. putting in this low, which then delivers a new high. So where's our protected low now? Our protected low is here, right? Became protected when we closed above the prior high. And you guys are probably starting to connect the dots on why this led to higher prices later on. Okay, so let's continue on. We have a protected low here. We trade up. There's no protected high in here. We make our high here. We don't close above it. We don't close below this candle. This is just a range. Okay, this is structure on a seconds time frame, right? We're putting a low here, a high here, low there. We run it here, trade above, run it there, come back in, and then leave, right? Now, zones at the top of the range are meant to be liquidated. This zone's job, this consolidation, was to put in this high, which became validated here, continued lower, right? And now if we're looking at structure, we need a body closure below here, which we didn't get. So there was no market structure shift that happened in here. It tried as much as it liked, but all we were seeing using our DTFX methodology is higher prices. Okay, so this low here, put in this high. This is all range action until we get a closure above this validated high here. Okay, and what do we see? We see a closure up here, which became valid, which put in a low here, right? This is the low that formed after we got the body closure. Here, we trade up, we close here, which makes this the low that this high put in, right? Which became valid here, but we didn't get a body closure above. So what happened here was we look, we get our protected low, trade it up, trade it down, trade it up again, and then broke. So this is a candlestick shift, change in order flow, right? And it delivered a body closure below our protected low, right? So this is our market structure shift. It has nothing to do with this low here because it's not valid. This is a seconds time frame change in order flow. And what happened here was you see, as soon as we close below here, this is a structure shift, and now we're taking the up move that brought us in. And we see our short that came in here, and what do we see with it? We see a low here, high here, low here, high here. Just put in a low here, technically, trade it back in, and then left, right? And if you were actually going in on a seconds time frame or something lower, you would see something similar on this candle here. Zoom in so you can see that, right? That low was 85. This low was actually also 85, but we traded back in and then we left. Okay. Now, this is all reading from the right side of the chart, but how do we know which areas we're looking for candlestick flips on and not looking for something, say, down in here or whatever, right? We're actually looking at higher time frame areas to the left of the chart that are responsible for something. So we look to the left, we see this consolidation here that was responsible for putting in this strong move, and we're actually taking this zone for it to trade back into. Because when it left this zone, it tapped back in, but this is left as unmitigated. Okay. And shockingly enough, where'd that 50% level hit? Right? So if we're looking for a trade back in, we're seeing a change in order flow right at the 50% level. This is our area that we want to look at for a short pattern. right? So when we say not to use this everywhere, essentially what we're saying is that this methodology is extremely precise. It's a science. There is a lot to understand, there's a lot to see, there's a lot to know, and you'll start seeing the market open up completely differently as you begin to study price. But it's more than just zones. It's more than just entry models and flashy 5-second entries that have, 3 ticks of drawdown and that lead to large moves, right? That's if you're looking for that, you're essentially looking for patterns and pattern recognition. And you might as well use an EMA crossover or something like that, right? Like we're trying to understand structure and narrative and follow price, and then we use our order flow tools to tell us kind of if there's a shift in what our narrative is. Okay, we use structure and narrative um, to see what the market is doing and why, and you need to know that before you even attempt to engage with price. Okay, it's not it's easy to get caught up in things, but the market really is a you versus you game. It's not you versus the market. It never has been. You know, um, so you want your entry confirmations inside of a POI, right? Point of interest, right? So if we had to quantify, really, we're looking at, you know, first criteria is structure, and that's essentially what the market is doing, right? And then if we're looking at what's second in terms of important, we're looking at narrative, right? And that's why the market is going there, right? Are we trading back up for a reason? Always, right? Going to a higher time frame point of interest. In this case, to mitigate a prior zone, and now we're going to see if it delivers down for a pullback or what it's going to do. Okay. And then in third importance, we're looking for our zones. And the zones are where we look to engage. Right? We don't just engage with price willy-nilly. We don't ape in when we see a bullish bar. We don't sell when we see a bearish bar. We have to pair that with our structure or narrative in specific places. And then actually least importance is your confirmations or your entry model. And what that's telling you is how do we engage with price, right? So, for example, you might like this failed high here, and now you're seeing a bit of a flip, and that's your one kick. You see this as your black cat all the time, and you're shorting here. You're understanding that this protected low has to be taken for this short to be a larger move. You might take it off in here, and then it actually delivers that. And now you're looking, okay, now I'm looking for a tap back in, and then lo and behold, another confirmation, you're shorting here again, right? But certainly back test that. Some people are more comfortable taking second trade. Some people like to be in immediately, right? Some people like to short, say, in anticipation, right, at the 50%, right? I don't personally use limit orders. I always wait for confirmations before I get into a trade. That's from the mentorship itself, and that seems to work for me. Okay, so we'll pause this for a sec because I just threw a lot at you guys. What sort of questions have we got? Would I have short on the 1347 candle? Let's have a look here. Would I have short on the 14.47 candle? No. And the reason for that is because you're looking for confirmation. So what do you see on the lower time frame order flow here is essentially you see after it breaks trend here on our seconds time frame, you're seeing this. And we're waiting for our confirmation flip. So 1347, this candle here, yes, it traded below here, right? But first off, you're trading into an imbalance. And if that's respected, we know from the playlist that's going to put in a new high, right? Secondly, if you're monitoring order flow here, we've got a high and then a low here, right? And then we get our trade back up. So we've actually got no real flip in here, right? I want to see this get ran, trade back in, and then go, in a sense. This is a bit of a mitigation, right? And I think it actually might have delivered a 1-to-1 of this seconds time frame zone here. Close. But recall what we said, where if it's taking a specific amount of time to leave a zone, knowing this is a higher time frame area, say it's a 15-minute area, we're not expecting price to just kind of come, tap back in, and then leave immediately. We're looking for this sort of consolidation as that time frame fills its orders to continue back down. Right? This isn't a 1 minute 50% level that we're looking at. Okay. Lots of questions, so you guys have to bear with me. Do I wait to engage with price only after 10:30 a.m.? That's something from Dave himself if people aren't profitable. I personally do not. I take trades from 8:30, but I'm very comfortable with structure at this point. So if you guys are struggling, that will be the time to engage with price. Usually you get your major volatile moves, as you guys all know, at 9:30 in the morning at cash open, or around news, which often happens at 10 o'clock. So on your experience. Which swings am I generally trading? I trade the first 4 personally. I recommend the first 3, but my edge is more in change in order flow and candlesticks. That's kind of where my background in futures trading sort of came from. So that's my kick, right? I usually take actually very similar to Oscar's trading. If you guys haven't seen his educator tab, I would definitely recommend checking it out. The guy's a legend. It's very similar to that. It also has to do with what time frame point of interest you're trading in. For example, if you're trading in an hourly point of interest, then you're expecting at least, 1 to 3 hours. You're going to get a few hourly candles within that zone before it leaves it. So what that ends up happening in hourly zones is you'll have some large 15-minute moves or 5-minute moves, or you get these huge legs on the 1 minute, and then you get a violent trade back in. And oftentimes what happens there is the higher time frame flip was somewhat fake and it has to come back down. Okay. Why is the 1-to-1 considered more profitable than trailing our protected highs and lows? So if we're trading, interesting little question. It's giving you more opportunity, but more profitable. I wouldn't suggest more profitable. It's certainly where I would think people would start because it gives you a very defined risk. For example, if you're looking at your protected low and then your valid high is actually in here, and this is just kind of manipulation, right? If you're taking a short off of this 50% level, let's say that we identify this as our high time frame zone, but we're not trading with a stop that's 90 points. I don't know about you guys. I don't have an account size like that. And we're looking at this short off of the flip. Our expectation is that this low here gets ran. And essentially what we're doing is we're monitoring the order flow here for protected highs if they come in here. For example, if we had a closure here and then we start flipping back up and we create protected low on a smaller time frame, that would be something to sort of monitor for your short position, right? Can you take a short here on the say 50% level with confirmation or whatever, take your profits here? Yeah, absolutely. You know, if you're able to do that, you know, 4 times a day with an extremely high win rate, you know, that would change your life for sure. Essentially what you're looking at is developing your strategy so that if you're short here, yes, this breaks here, your protected high is here, but you're not leaving your stop here once this becomes protected, right? You're trailing your order flow here, you're looking for bullish shifts of momentum, right? So what you're looking at is you're looking on seconds time frame. Do we get a body closure above key lows that are put in? No, right? This one didn't close below here, so this is just a range so far. We still don't get anything closing. We trade below it here. We don't get a body closure here. So we're kind of monitoring our lower time frame order flow to determine where our stop could be from our short here, right? And again, this is a little bit more advanced, right? If people are struggling, certainly you know, take your 1-to-1 and then look for a trade back in or potentially a long at you know a point of interest from down here that was responsible for something that went up, right? But if you're sitting short, that's what you're looking for. Hopefully that answers that question. What else we got? How do you pick high and low on the other time frame? The exact same way that that you draw them on smaller time frames, right? So we're looking at that zone that we drew from over here, right? We've got our low that was put in here, no body closure. Zoom in so you guys can kind of see this, right? No body closure here, no body closure here, and then it broke here, right? So in theory, I actually took it from this sort of manipulation leg, but you could, in theory, look at this being the higher time frame high in that case and kind of trail that over there. But you'll notice that you're essentially getting the same sort of thing. You know, we're looking to trade areas and then find sort of order flow confirmations in there. Okay. When is the swing count reset in a strong trend up? Right. So we understand from the playlist that we get a maximum of 7 swings before a reversal. So essentially what you're seeing is the science behind it is that if you follow the 5-second time that would mean hundreds, right? So that doesn't make any sense. So essentially what we're doing is we're taking our lower time frame swings and we're counting our protected highs and lows. And when that resets, in other words, when we have a lower time frame flip, those swing counts get reset. And now we're trailing the lower time frame to continue up, right? Off of our new swing count, right? So for example, if you look at this on a smaller time frame, how many swings do we have, right? We have got a low put in here, high put in here, consider that there instead, you know, low put in here, high, low, high, low, high, low, right? And you'll find that because of price fractality, that even on the lower time frame, before swing counts are reset, you'll get a maximum of 7 as well. You know. Okay. Last bullish candle, yes. So for a swing to be counted, the last bullish candle to put in a high, right? Not any bullish candle. candles that are valid for something, right? So this became a valid high because this candle closed above the previous high here. This candle did not, right? So trading below this candle is moot, right? It's got to be responsible for something. Okay. Still lots of questions. Okay. There's a lot of different things. I'll get back to some of these questions as well. Let me finish off with one of the last few things that I want to talk about with videos 1 to 4. Okay. So if we're looking at this chart here at a 15-minute, right, we understand that this was, obviously range-bound action. What happens after each structural high that gets taken out, right? We had a structural high here. This was the hourly candle that got put in that put this low in. You're expecting accumulation when that happens. And essentially what that's doing is the market's deciding whether it's going to continue up or whether it's going to pull back or what it's going to do here, right? And the way to determine that is to use your validated highs on your higher time frame chart. Okay. So for example, you see this hourly doji, this was the high that got broken. We would need a candle closure below here in order to validate this as being the high. We don't get that, right? We trade up, we fail here, leading to downward action, okay? But if we're also looking at the 15-minute, we see our high here. As soon as that got taken, we traded back into the range, we accumulated, we actually pushed up a little further. And then what do you see? We see this is an hour and a half, hour 45 minutes of accumulation here. And as soon as we break and close above this candle, we accumulate again. And then we see our change in order flow, which then facilitates our pullback. Okay. So essentially what this tells us is that we're not buying breakouts, right? We're not buying up here for the moon, no matter what it looks like. The profit and the money is in the pullback here. Wouldn't we rather take this trade here and have it be less stress, or look for a change in order flow here to take us back in, right? We're not buying up here hoping for 5 points or whatnot with a 50-point stop. Okay. So our narrative tells us that we're trading based off of if-then scenarios. And you're always thinking in your mind, because it goes back to what we're talking about with pattern recognition. We don't want to just trade patterns. We want to have the narrative. So if we're looking for a short up in here, we're not just looking at a flip, even at a zone, and just taking it willy-nilly. And then as soon as we're up 20 points, now we're starting to look at whereabouts it should go. No. If we're looking, even considering a short in here, we have an idea that's going to trade back into where? The previous range. Okay. And then back down around the accumulation area, we would expect to either take profits, and then if we get another change in order flow, and you actually see this on the 15-minute chart here, that'll be the low there, right? What does that look like? Just because I'm OCD, do this, right? That this pullback is over, at least for the moment, and now we're looking for retracement back in, and now price is going to decide whether it breaks this high from this low on the 15-minute time frame or what it's going to do. Okay. But we're looking at if-then scenarios. For example, if we're shorting here, I'm short until X, right? And essentially that X should be some sort of bullish momentum change. And then we're long until X, and that might be, bearish momentum change in here, or you're looking for a trade back into this zone here that it left, or, there's many different reasons for that, right? You've got to back test that and find your edge and your kick and what you guys see. Okay. Yeah, the only thing I can sort of suggest with that is that the market. She's an amazing, fun, and cruel mistress. She is the best in the world at creating emotion. She wants those executions, right? She's going to give you this massive bullish bar right at the end, right? And everybody's thinking it's going to run this highs here. And then what happens to your stop loss, right? She knows exactly what she's doing. And our job is to create systems that eliminate a lot of the discretion from our trading so that this sort of thing doesn't happen. Okay. Okay, we'll do 5 more questions. All right. And then we'll wrap this up a little bit. Hopefully this is kind of a nice little refresher and review of everything that kind of went on. We got right. So that question, if we're looking at where we expect to open up or what we're doing, and this will probably be the pre-market as well, right? We notice a few things. The first one is that if we're going to reject from somewhere and deliver us lower, our higher time frame area would likely be something like this, right? So our 2 if-then scenarios are, we have our unmitigated zone up here. This is some sauce for you guys that we'll probably be doing in the pre-market analysis, right? And what do we want to see if that happens, right? Recall as well, guys, that if we have a movement here, trade back in, a movement here, a trade down, a movement up, trade back in, and something like this. This did not mitigate this zone, but this is still a valid swing on that time frame, right? As long as we have our valid high and our valid low, right? This becomes protected, of course, when it breaks and closes above this. So what we have here is this area wasn't mitigated to the 50% level, but this is still a low that broke the high. So this is still protected here. So the 2 things we notice are our first swing down was 488 points. And what do we notice here? This pullback was 159 points, right? So we're seeing things really tighten up as we get into a 50% level. So is there a possibility of this time frame shifting and continuing lower? Yes, of course there is, right? And that's not going to come from a shift in 1-minute order flow or whatnot in here. You know, we're certainly at our highs, right? We could very well come back down to mitigate this area and then continue onward. Alternatively, we might, just tap back into this zone, come higher, and then come down, right? But if you're looking to sort of estimate what the hourly is doing, essentially we've got a lot of ground to cover to make this protected low broken, and then trade back down into our unmitigated zones here, right? Not sure if that answers, right? Or you talk about the smaller time frame order flow. Okay, what other questions do I have? Yeah, I take entry here. It should always have this pattern while trading trend. What was that 1053? I mean, I don't know your profitability or your potential system if you're looking to take a trade in here. I personally am waiting for retracements into the zone. I don't like getting caught near the top of ranges. Unless you're extremely consistent, I would recommend against trading top of ranges, right? Because recall, this didn't close here, this one did, right? So where's our prior swing? Our prior swing is here. If you're buying up here, essentially, you know, you're anticipating or expecting that this is not going to pull back further, right? Now, if you're consistent enough on smaller time frames where you're seeing, you know, this being a 5-second zone, right? Because this is smaller time frame structure, you know, you're taking the 50% of this and you get your flip, then fair enough. I personally was waiting for something to form to take us up to take a short out of it, which I did, right? That's not to suggest that we can't make money here. It's just I would be very cautious about taking longs at the top of ranges. Okay. Okay. Every time frame protected high, lows, and ranges. You have to be aware of what the market is doing, and in your back testing and study, you're going to have an idea of what the market is moving towards. And then your analysis is essentially saying, if it's going to continue moving towards this level, what do I want to see for that theory to be correct? And if it's going to move away from that level and trade back down to an unmitigated zone, perhaps, what do I want to see for that to happen, right? But unless you're taking trades off of the hourly, you know, I look at it maybe, you know, 2 or 3 times in the day. I take trades off of, you know, the 1 minute and the 15-minute for structure, and then I use smaller time frames for that. Okay. Yeah. Okay. Last question from Marie. Do you have specific you always use? I trade based off of weak highs, weak lows. If I'm taking scalps, then, you know, if I'm taking shorts in at the top of a range, then I usually aim for 10 points depending on volatility. But I always have an idea of where I expect to trade towards, and I sort of base it upon there. I don't really like. I always trade with stop loss, obviously, but I tend to have an idea based off of candles and my study that way of what I want to see order flow doing, and I trade that way. You know, sometimes I get you know, 2 or 3 points on a trade, and then I re-enter if I see something I like again, right? But okay, 261 people in here. Thank you very, very much, guys, for all of this. This was a little wild, and I'm sure you guys have some more questions. There's some wonderful educators in here. You know, there's please reach out to some of them. You know, they're we'd love to help them get more of a platform. They're going to be doing some more stuff in here, I hope. So, yeah, enjoy your guys' trial. If you're here on a trial, hopefully we'll be able to provide some value for you to consider staying.